and welcome back to the November session of Startup Streamlined. My name is Lindsay Stencel. I'm a partner in the New Ventures Practice Group and also oversee fund formation for the firm. And today joining me is the queen of M&A, if you will, Emma Off, a partner in our Cincinnati office. And she's an experienced transactional attorney, one of the best of the best. And she's going to discuss with us, her experience in broad-based general corporate and securities transactions and some of her background. And, in the past, she's handled a variety of issues, including incredibly complex commercial transactions, reorganizations, mergers, acquisitions, JVs, and entity formation. So 2020 has been an interesting year, a lot of twists. Plot twists. And it's a year that we saw some climbing inflation, interest rates, tax changes, and other competing factors that have worked to drag down the M&A markets. And then we threw in a midterm election too, so why not? And today we're going to deal with some of the hot topics that we're looking at as we close out 2022 and roll into 2023. As always, if you have questions as we roll through this, drop those in the chat for us, and we will work to get to those as we process through. And if we don't, we will certainly follow up with you afterwards. So with that, let us get started, and let me welcome Miss Emma Off.
Thank you, Lindsay. I'm happy to be here, and it was great to see some familiar faces on the RSVP list. I smiled seeing many people I knew hopefully joining, and maybe I can share a thing or two about what we're seeing in the M&A market. I think it's important to give some background on the type of transactions. I primarily lead here at Thompson Hine. I would say my M&A practice is split between private equity, financial sponsors, so buy side, as well as the financial sponsors, exiting and divesting some of their assets, as well as representing strategics, family-owned, buy and sell side. It's really pretty equally weighted in the Midwest. We're kind of a mutt here, so I can't say that we specialize in a specific industry. We do have, expertise in, what you would kind of expect in the Midwest, manufacturing, chemicals, things like that. But I do a lot of consumers. I help Lindsay and her team with a lot of emerging entities who have gotten to the stage of an exit, which is very successful for those founders and the venture capital investors. We are very mid-market. We represent transactions all across the country and really globally. I do a lot of cross-border transactions. Nowadays, so many companies have global operations, so it's pretty frequent where a transaction we're leading does have some kind of touch in a jurisdiction outside the United States. So I represent a lot of clients with cross-border considerations, and traditionally do private markets. I have represented private companies who have acquired public companies, but we're usually not representing public-to-public deals here at Thompson Hine. It's usually a private company, either private equity or family-owned, strategic, acquiring a public company or being acquired by a public company. So that is my background to kind of level set. And like I said, mid-market, I will do all sorts of transactions. Again, going back to the Midwest mutt, I'm happy to support a small deal. I love helping founders. It doesn't have to be a big deal. We do so much M&A that we can do those small deals very efficiently. I think people worry about, I can't use a bigger firm for, M&A. If it's not complicated, that's actually not true. We can do those kind of deals quite efficiently. And then larger transactions. I recently closed a deal, valued at $900 million. So it totally runs the span. So we see a lot of things, which I think will be helpful to this discussion, Lindsay. Okay, now do you want me to tell you what I'm seeing in M&A? I talked for a while there.
No, that was great. And I think it's important for everybody to hear some of that background so that everyone kind of understands, hey, look, like, here's the spectrum that we're talking about here. But I think as we head into the tail end of 2022, which has been interesting, Are there any end of year items first and foremost that, well, no, let's back up. Let's talk about the trends that you're seeing first. What are the market trends that you're seeing in M&A right now that are impacting
Okay.
deals that you're seeing today?
So I want to make a distinction between what I'm seeing and what I know is going on in the market, because what I'm seeing is still insane volume of M&A. I mean, my year to date 2022, I think is busier than 2021, which is incredible. I mean, I think that we all thought there was going to be a softening by now, and that is coming, no doubt. I know a lot of people I talk to across the country in private equity, investment banking. I mean, that pipeline is softening for sure. We will feel that soon. But what I'm seeing, I'm not yet seeing that slowdown. What I'm hearing and seeing statistically is certainly a slowdown, no doubt, in the M&A space. Anybody who reads kind of an M&A outlook or any kind of white papers that are published by some of the bigger banking firms, certainly M&A year to date over 2021 is down pretty significantly. And we also see that looking at legal trends, certainly down. I'm not seeing that yet, but in the marketplace, there is no doubt has been a softening year to date. Now, keep in mind, 2021 was a historical year for transactions. I mean, the deal volume that was pushed through in 2021 was unprecedented, even if you go back, long time, 2 decades. I mean, we just haven't seen that kind of M&A activity. So we're coming off a very active year, and we're seeing, in 2022, of course, it slowed down from 2021, but there's still, strong, the strong system and M&A market is in place. But we have to talk about the macroeconomics and things that may be impacting that M&A market, especially as we move into 2023. So 2022 has still been very active. Deals are definitely getting done, especially in the middle market. I think with the public equity markets, being a sell down, people that has, driven down some of those larger deals, and some of the larger deals with interest rates increasing, the capital spread getting wider. It might be a little bit harder to do levered large deals, but we're in the mid-market, low-market space. And if you're an attractive, resilient target, there are still, definitely buyers for you. There's going to be, you're going to be able to get that finance. So what I'm seeing in 22 has been still very active, but I know the market, it has certainly slowed down, Lindsay.
Yeah, and so it's similar, right? In the venture market, we are seeing a transaction volume that we would have seen in, this is countrywide, like it looks more like 2016, 2017, where everyone was like still stoked about that volume at that time. Are you seeing something kind of similar then in the M&A markets? What year would you liken it to in recent past, I guess I would say?
Yeah, so to prepare for this meeting, I did look at some data because I was interested myself. And if you look at data, and I think this was a JP Morgan outlook for Q3, if you look back at various years, this is where we are now in 2022 year to date is really more like 2010, 2014, coming out of the great financial recession. After 2014, M&A activity 2015 to 2021, with the exception of the pandemic in 2019, there was that blip because people really were uncertain about what was going to happen. And then obviously we all know it came back very strong. So I think that the years 2010 to 2014 had a steady deal volume, and I think that's where we are. It's steady. It's not at any kind of like frenetic pace. If you've got the free cash flow, what I'm seeing people focused on more now is profitability as opposed to growth. I think that people were willing to invest in companies that were burning cash but had high growth potentials, and I see now people being a bit more judicious. Of course, they have to think about the uncertainties, and they're looking at companies that are going to be profitable, have cash flow, as opposed to those high growth kind of opportunities. The good news is I believe that some of the issues that we were facing last year, this year, that kind of drove deal uncertainty, like supply chain. I see that the supply chain issues, from my experience in talking to business leaders, those are starting to get sorted out, which is great. But now we have to deal with inflation, rising interest rates, which is going to, impact deal valuation, of course, public market volatility, war in Ukraine. Now we're kind of dealing with headwinds impacted by those things.
Yeah, so I guess let's talk about the effects specifically of inflation, rising interest rates, and the value of the U.S. dollar in comparison to maybe some other currencies across the globe. How is that coming into play in the deals that you see?
Well, right. Of course, if things are getting more expensive, buyers are not going to want to pay as much for a business. Either they're having to pay more for capital to do the deal, or the value of the business is just different, and what the business is going to demand with inflation. Speaking with a lot of colleagues in Europe, it definitely seems that they're feeling more the recession. We can argue about, are we in a recession? Are we going into a recession? I mean, I think certainly there's going to be a recession if we're not in one. Over in Europe, the deal flow has really slowed up, and that's probably just coming our way. I think what's going to continue to be a pressure point is valuation. I think sellers are still expecting those high multiples, and it's going to take them some time to realize you're not going to get those high multiples in this environment. And I think that might be several more months before they really realize that. And some sellers may decide, and I'm seeing this, I'm going to wait this out. I want kind of those high multiples. I don't know if those high multiples that we saw, record highs, stupid high multiples, will come back. One thing I do know is when you look at downturns in the economy, the Great Financial Recession, the Gulf War, the dot-com boost, M&A does come back strong. It will depress, but it will come back strong the next business cycle. So I do think sellers may just, if they have the luxury of waiting it out, may say, I'm going to wait this out. Again, I think valuation is going to continue to be a pressure point. What is the business, worth? What's the seller willing to sell it for? And how can we be creative in bridging the gap, be it with an earn-out, seller note, things like that?
Yeah, super interesting. And I agree with that. I think we're going to see this depression, and then it'll end up coming back a little bit. But it's interesting, right? Because I think we were so focused on growth for such a long time, and now to have businesses arguably that are a little more capital efficient. And I guess we're seeing that trend too in the market, right? The public markets aren't loving the companies that are like, we're going to grow. We promise we're going to grow. Okay, what is your actual, cash value? What are your returns to investors? So, okay, super interesting.
Well, yeah, and that public market, the value's coming down that trickles down to the private market. You know what I mean? So to your point, Lindsay, what we're seeing in that public market with the values kind of coming down, that's trickling down to the private market as well. But the good news is, we all know there's a ton of dry powder out there.
Sure.
There's more funds than ever. People are trying to invest in alternative asset classes, again, because of what's going on in the volatility in the public market. More funds are being raised. Lindsay, I'm in Cincinnati, and we've seen several. We need more. I'd love to see more private equity here, but we've had a few new ones in the region, which is great for everybody. There's dry capital, private equity. They have to return capital to investors, so they're going to do a deal. It may be more expensive. Then you see the value, implication in trying to negotiate at what cost. Credit's available for good, resilient companies. Talking to bankers, I think it's still pretty competitive. Again, if you are an attractive target. Strategics, they want to grow through, they've got to innovate if they want to grow and have money on the books. They're still doing deals. Now, I've seen them get pretty picky and say, I want this asset, but I'm not willing to pay this price, and I'll wait 6 months to see if it's sold in the meantime. And they'll play that game.
Yeah, definitely interesting. So what if a company didn't sell, maybe isn't doing the greatest, right now. What is your recommendation for a potential target who maybe missed the boat of 2021? What are you telling those folks now?
I don't, unless there's a real reason that you want to exit, if your company is not doing well, unless you think it's just going to continue to decline and you're at the best point now that you can exit, I would hold out. I would wait, go through, try to get through these, this recession, kind of solidify your business, work on, work on getting the EBITDA up, work on the cash flow, work on just the business principles, hire a good investment bank to help you think through that kind of thing. But unless there's a real reason to exit, if you're not doing well, I certainly wouldn't suggest going to market when your business is not performing. Unless, again, you feel like the business is just starting to go downhill in general, and now is the time to get off the train. But I think a company's going to see through that, of course, any kind of buyer.
Yeah, more likely than not. I'm also thinking about some of our, fund clients who are, they have a finite life, right? So they got to get out of some of these deals. So what result? So there is a possibility that they get pushed into it too, and they're still not.
Yeah, what is interesting is in 2022 we saw more private equity sponsors waiting to divest because they need to get it. It's a multiple play, so they're kind of waiting. If multiples are down, they want to see, and maybe I wait a little bit, even if it's another year. Wait a little bit to try to maximize multiples with the uncertainty. So that was interesting. We in 2022 in the private equity market saw more buyouts as opposed to exit of the portfolio companies, which again is, I think, going to that uncertainty, volume values coming down and things like that. But if there is a reason why you need to deploy capital, why you need to sell, why you need to return capital to your investors, I think if you hire good advisors, hire a good investment bank to help you strategize on, okay, we've got to go to market, so what's the best story that we can put forward, finding somebody that's going to really be able to canvas the market and create a good market for your business. I think that's key. And for people listening that own businesses, one thing to keep in mind is investment bankers not only can run competitive auction processes, but they can also selectively identify potential buyers for you if you aren't comfortable doing a full-blown process. So I think that's important for business owners to keep in mind. I also think as we look to the future of M&A, we still have these baby boomers that are going to need to exit the business that don't have good succession plans in place. And so that will continue, just like private equity needing to return funds or deploy capital. We're going to have people, really in a time in their life where they are done with the business and they're going to go to market and see what they can get for it. And it might not have been what they could get for it in 2021, but, there's still a good market out there.
Sure. No, totally agree. Totally agree. So I'm just curious about this from a structural perspective. Have you seen structural changes in the ways that deals are getting done? And when I say that, moving to more of an earnout, moving to more asset acquisition versus, stock acquisition. I'm just kind of curious.
Yeah, I mean, not in the service industry, you're always going to have an earnout component. I mean, that's always going to be the case. I think in the lower market, I've seen more creativity in the lower market. In the mid-market, it's still pretty strong, where, it's not as if a deal where maybe wouldn't have earned out, now it's suddenly, we need an earnout because we can't agree on the value. I'm really not seeing that. Again, in the lower market, I am seeing, earnout, seller financing, things like that, but that's been around. That's always been a component of lower market deals. Again, certain industries, you're going to expect that. Service industries, you're always going to have some kind of earnout to prove out the model post-closing.
Interesting. So, I guess, have you seen any, what are the biggest concerns then that you've seen from from targets or sellers as they're rolling forward into some of these deals? Is it uncertainty? Is it need to close before 12/31? Is it?
There's no need to close at the end of the year. There's no like tax change. I always laugh as an M&A attorney when people think that you have to get things done by the end of the year. I mean, usually that's really not the case. And even with the tax changes that we saw at the end of last year, and it was modest. I mean, people that was not an incentive to try to get a deal done. So, you know, I think as sellers, they definitely have headwinds. I mean, they've got rising interest rates, inflation. We haven't totally returned from COVID. Obviously, that is still ongoing. There will probably be some kind of COVID outbreak, but now I think we've got a better idea on how to handle that. You know, credit is not going to be as available as it was, more costly. So there's no doubt there are headwinds in the marketplace. But I think that the fundamentals are there. And
Sure.
if this slow up, you know, will be a slow, but there will be a strong, there's still strong opportunity for selling. Yeah, again, you might not get the multiple that you would have gotten in 2021, but I just bought windows and I had to pay 37% the estimates from 2 years ago, and that is just what it is, unfortunately. Things are more expensive.
Ain't that the truth? Tell that to my grocery bill. I'm aware. So I'm kind of curious too. What about the buyers? Are they feeling maybe? I mean, I understand like credit markets are a little different, inflation is different, you know, interest rates are a little higher. But how are they feeling about maybe multiples returning to a more reasonable number?
Yeah, well, like I said, when they do, I think sellers are still not yet there. A lot of buyers don't leverage deals. I mean, a lot of buyers have the financing available, especially strategic buyers. I mean, private equity, that's a different model. They're going to get financing. But a lot of our strategic buyers have the capital available to do a deal, and they want to do deals. But like anything that's worth a damn, you're going to have to pay for it. So I think that the buyers will do deals, want to grow strategically through acquisitions as they have, but they're going to have to be able to agree with that value. So for those kind of buyers, I think it's just going to be, can they get behind the value? And for the good targets, again, resilient, you know, free cash flow, profitable, those are always going to be attractive targets in any market.
Sure. I mean, yes, I completely agree with that. It's funny, like when clients come to me, they're like, what makes this successful? I'm like, they are making money. Like, and you're making a lot of
I mean, if they have a good they have a good business model, they're not really prone to, impacts. And again, if you can think about your business and look at like where are the weaknesses and how can we try to strengthen those, diversification in customers, like don't have 80% of your revenue from one customer.
Yeah.
That's just a weakness there. Supply chain, you only have one supplier, and are they somewhere that, in China where maybe the factory's going to get locked down because they have like the no COVID? I mean, just looking at your business and thinking about how you can make it more resilient. And if you're a seller who is thinking, I'll use this opportunity to sit out and strengthen my business, now's a good time to do that.
I would agree with that. So what about, I guess one of the final questions here, are you seeing any industries that are a little hotter than others? I know we deal with a little bit of everything here at Thompson Hine, but have you seen any industries that you're kind of surprised that you've seen more deal flow in them than others?
I think there's a lot. I've seen a lot of focus on e-commerce, thinking about how commerce is changing. So there's a lot of deals in the e-com space. We see that in some of in Cincinnati for those participating. I know that eGateway Capital is raising a lot of money around that business model, and I do see that across the country. A lot of platforms focused on e-commerce, technology. I think is always going to be active. Healthcare for sure. I've heard technology is actually kind of slowing down. the internet, like the 5G, the Internet of Things, how can we protect data? Those are things that are going to be increasingly important as we move forward to many businesses.
Yeah, I would definitely agree. The cybersecurity companies, I've seen quite a few of those. All of a sudden, lots of folks are kind of kicking around going, we have to get our stuff in order, and it's easier for us to acquire than it is for us to try to build some sort of system internally. So
Right.
definitely unique and interesting. So I guess we only have a couple more minutes here to round this out, but do you have any closing thoughts or recommendations for the listeners out there as they are rolling forward into 2023 beyond what you sort of suggested already?
Yeah, I mean, depending who they are, because I think we've got a mix of listeners who are either advisors or business owners themselves. I think for the M&A specialists like myself, and maybe I'm biased, but I'm not thinking that I'm going to be out of a job anytime soon. I think there's always going to be deals to get done, good deals, happen, divestitures, acquisitions. What is something that is interesting, Lindsay, that I'm seeing more and more of is people deploying capital in different ways. So they may not want to buy a business, but they're willing to take a significant minority stake or joint ventures. They want to dip their toe in with a company. I actually, in the past year or two, I have seen that, and at large public companies too. We've supported some of those kind of joint venture or minority equity investments. I know with mezz debt, the mezzanine lenders taking some equity. So I think people want to put their capital to work. It's just getting creative. So, anyways, back to what I would say is you talk to your advisors, of course. Like if you're a seller, if you're a buyer, get good advisors, legal, financial advisors, good accountants. Agree on the valuation. So many people ask me, what should I go out for? Before they engage kind of a banker. A lot of times, depending on the deal size, do a Q of E yourself. See what your earnings look like and how resilient those may be. You could get a valuation like lower market. You could get valuations for a fairly low cost, so you can understand what the market may dictate. Some sellers don't really understand what they're going to get in the market. And then for the small business owners, one thing I'd also always recommend is keep in mind things that you run through the business and what you would really need to get for your business when you don't have the luxury of running the company cars and the golf course and all that kind of stuff, and the tax advantage. But I think, I think it's a slowdown, but it's still a strong market. Obviously, there's headwinds. There's macroeconomics that are going to impact this. It doesn't last forever. Everything's cyclical. And, it will be a slowdown, but that's a good time for us all to kind of regroup and think about how we can come out stronger and how deals will look the next business cycle.
Perfect. Well, with that, Emma, thank you so much for sharing your insights and what you're seeing. And it's good to hear that we haven't, totally felt the perceived slowdown in the M&A markets, at least in the middle market space. So everyone out there on the internet, that concludes today's discussion. If we didn't get to your topical question, please we'll know that we will follow up with you separately here after this. As a reminder, the webinar was in fact recorded and will be available in our Thompson Hine library out there on YouTube. So please hit like, subscribe, and ring that bell so that you can keep up to date with great content like Emma gave us here today. And naturally, we want to thank Emma for attending our Startup Streamlined today. So Emma, thank you so much. We're so grateful for you.
Of course.
And when this webinar ends, folks out there on the internet, you're going to be prompted with a couple quick questions. Please, they're super easy. There's like 3 of them. So please respond and let us know what other topics you'd like to learn more about. And next month, we'll be joined to talk about everyone's favorite topic, securities litigation. So,
geez.
So
you don't want to be there, folks.
So with that, I bid you all adieu. Happy Thanksgiving, and we'll see you next month. Thanks, everyone.
Thanks, Lindsay. Bye, guys.
Thank you.